Well, hey everyone, a familiar question on the minds of a lot of analysts and investors right now is it 1998 or is it 2000? My name is Kurt Mueller and that's what we're diving in here today. So since the yield curve inverted back in August 2019, many investors, many analysts have been paying close attention to the structure of the yield curve and the behavior of the bond market. And the big question on a lot of minds is, are we seeing another 1998 or is this more like 2000? And really that remains a critical question for markets as the yield curve approaches the yearly highs around 70 basis point. Now remember this is despite a pandemic, this is despite a recession, a recovery, and stimulus. And so the yield curve behavior is really mimicking and resembling a lot of the behavior that we saw in the late 90s. The second question on a lot of people's minds right now, whether they're investors or analysts, is what's next for the 10-2 spread? And if you've watched any of my videos, as a refresher, the 10-2 spread is the spread between the 10-year Treasury yield and the 2-year Treasury yield. Now, why should we even be concerned with this? Why am I asking this and why am I bringing it up to you? Because if we do see a sharp move higher, that would be consistent with what we've seen into some major bear markets over the last 15, 20 years or so. Think 2000 and think 2007. Now, on the flip side, the pace in the trend is moderate at best for now, and it's possible that that could roll over and test some of the early 2020 lows of 20 basis points. So it's pretty clear, and I think there's a general consensus right now among investors and analysts that we are at a critical tipping point. Now, why would I say that? I say that because currently low duration yields are being pinned down near the zero bound. And it's likely going to continue to stay this way, especially when you consider the Fed's very easy forward guidance. So what's the bottom line with all this? The direction and the pace of the next move of the yield curve, I think is really critical because that is going to offer some valuable insight into, the financial markets, broadly speaking, from stocks to bonds to the US dollar. And so that's why I think the next move and the pace of the next move is really, really critical to understand and to evaluate. As I said, I think it's going to offer some critical insight into what we can expect from a broad overview, again, from both stocks, bonds, and the US dollar. So the reality of it is here, I would encourage you to, continue to stay abreast of new information and what's going on with the 10-2 spread. And as always, if you do have any questions, you can reach out to me here. Thanks so much for watching and hope everybody has a great rest of their day. Take care.